both political parties deeper into the pockets of those who have the money in the corporate sector. By now, among the Republicans, it's reached the level of farce. The Democrats, who actually are what used to be called moderate Republicans, not much behind. The latest election was interesting in this respect. If you looked at the outcomes, there was a very close correlation between the Republican vote and wealth. So if you take the median wealth or median income, it doesn't matter. Below the median, there would have been the vote would have given an overwhelming victory to Obama. Above the median would have given an overwhelming victory to Romney, and that's quite misleading because almost half the population doesn't vote. And if you look at them, they're of course well below the median overwhelmingly, and they're overwhelmingly Democratic, but they don't vote. So if they'd voted, the whole election would have been a landslide, which raises the question why they don't vote. Well, one reason, which has had some discussion, is that many barriers are placed to make it hard for poor people to vote, designed to exclude the poor and the more deprived. But there's another reason, which hasn't actually been studied, but it could be studied. If you look at the data that's around, it's pretty plausible. They may simply realize that it doesn't matter whether they vote. And there's good evidence for that. Political science, one of the things it studies very well and carefully is attitudes. Very heavily polled countries, so we have a lot of information on people's attitudes and policy and the correlation between them. And the results are revealing. The gold standard in the field right now is a book by Martin Gillen, just came out not long ago. It's called Affluence and Influence, quite worth reading. He concludes, after an extensive study, that the lower 70% of the population, lower income, have no influence whatsoever over policy. So they're effectively disfranchised. Doesn't matter whether they vote or not. And without knowing the statistics, they surely realize it in their lives. Why bother? As you move up the income level from 70% up, you start finding more influence. At the very top, people get what they want. Some of the effects of this are studied in another recent book that's worth reading. It's by the Inspector General of the Bush-Obama bailout programs, Neil Barofsky. It's called Bailout. Very close analysis of what happened in these years. And what he reports is kind of hair-raising. He reports corporate, in detail, corporate treasury deceit and fraud that would be comical if it wasn't so serious. And it got considerably worse under the Obama-Geithner years. The legislation that authorized the bailout, if you look back at it, it was two-sided, congressional legislation. The financial institutions that were responsible for the crash, they were to be saved by the taxpayer. That's one. And the victims of their misdeeds, actually crimes, that were to be very partially compensated by measures to protect home values and to secure home ownership. Well, to the surprise of no one familiar with the workings of what we call democracy, only the first part of the bargain was kept. Financial institutions were rewarded lavishly for causing the crisis. The famous park bailouts were a small part of it. They're now richer than ever, bigger than ever. Meanwhile, the rest of the program floundered. Quote Borowski. Foreclosures continue to mount. 8 to 13 million filing forecasts, while the biggest banks are 20% larger than they were before the crisis and control a larger part of our economy than ever. They reasonably assume that the government will rescue them again if it's necessary. And the credit agencies assume the same thing. They incorporate future government bailouts into their assessments of the largest banks. Now, that exaggerates market distortions. It provides the biggest banks with a great advantage over smaller institutions. The rough estimate of the value of the government insurance policy for the half dozen or so biggest banks is on the order of $60 billion a year, your money. In short, it concludes Obama's programs were a giveaway to Wall Street executives and a blow in the solar plexus to their defenseless victims, and very likely a stepping stone towards the next and probably worse financial crisis as a huge amount of business lobbying chips away at the Dodd-Frank regulatory proposals that are being considered. All of this is just the latest phase in a class war. There's a good recent review of it, a brief, very lucid recent review by the Economic Policy Institute. They're the major source of regular data, reputable data on these developments year by year. It's called Failure by Design, and the term design is quite accurate. Other choices were possible all the way along the line, still are, and as they point out, the failure is class-based. To borrow the imagery of the Occupy movement, it's a failure for the 99%, grand success for the 1%, and an even grander percent success for the 1/10 of 1%, who've been the ones who are really breaking in the dough. All of this by design, continuing, likely to get worse.